Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. Well, not much volatility tonight. What shall we talk about? We will have our good friend Norm Winsky on at the half hour to chat with us, but I'll try to go through what I see happening as we look at these things. First off, we'll start out with the DAX and the FTSE. You can see they've had a big break. This is going to be probably known as the Italian connection, because once they shut down northern Italy, all bets were off. Even the thing with the Arabs had been pretty much into the market, with the exception of that last $10. But we did make the long-term weekly target of $30 a barrel that we've been talking about for quite some time, and that whether that means anything or not, I don't know. But that's the sleeper today. I would, folks, I wouldn't trade. If most of you folks should not trade these stock indices because it's going to be too crazy with limit down and stuff like that. But I'll go over that in just a minute. If you're going to trade anything, trade crude oil. It's trading very nicely. Gold's trading nicely. And gold last night, that Bloomberg's reporting, gold making an all-time 7-year high, which it was. What they forgot to tell you was it broke $40 as they were speaking. I mean, these are not ordinary times for people. Let me explain to you my interpretation of what happened last night. If you'll take a look here, I follow the foreign currencies quite a bit, and this is the trade that people talk about as risk on or risk off, and this is this Japanese yen. I'll talk about that Australian dollar because it had one hell of a move, Marshall. Yes, and it was a correct move. I was watching it. You'll notice here that on the left side, you've got the Japanese yen versus a dollar. You see when that yen starts to increase, you'll see here that pushes the stocks down. So that's pretty much what you want to remember. That was the key for me. You notice how it gapped up last night. It only gapped up about 100 pips, and then boom, away it went. And that's what happened to bonds. Bonds had a move yesterday that made the one on Thursday or Friday look like a bear market. 9,100 in the bonds, folks. Woo, boy, that's a big number. Okay, let's move on here to a couple other things that we want to cover. All right, let's talk where we are right now. All right, here's where we are. Get this up here, take a look at it. This is from a little bit of experience doing these things for many, many years. Okay, here is the trading last night. Okay, there's our high that we made last night right around 10:30. You'll see that around 24,790. We went all the way down. We dropped 300 points. Then we rallied up to 61% retracement. Those lines that you see there at 2230, that's when it was limit down the first time. Okay, then you'll notice between 2:30 and 5 o'clock, it didn't trade at all. Then it rallied up to a 382 retracement and locked down again. Folks, if you remember a couple of weeks ago, I said we're going to see a $1,900 per 1,900 Dow points in one day, that today's going to be the day. Because with the lock limit down, as soon as they take the limits off, if the Dow opens 400 lower, which I think it will, 500 lower or more, I think we're going to hit that 2444 level, and that would be very, very close. And watch the number of 2765 in the S&P. That's down about 60 handles from where we are right now. That'll be another one that will be real interesting. So let's keep a close eye on that. I think it'll be something. This is not the end of the world, folks. This is nothing like 1987 at all. That move in the bonds is, but nothing else is like that at all. This is just a correction, and we're going to be able to see what really happens. Let's move over to what our game plan was. If you remember here, we were saying from the time we made that A leg up here, when we had the 3 drive to a top pattern at 33.93, we were expecting to rally back. Perfect 50% retracement. And then today, this was last night, you can see here that we opened at 20 right around 28.90, I believe, and immediately, well, not immediately, within the first half hour, we took out the lows at 28.55. Then we've locked limit down ever since that time at 28.19. You'll notice the 61% retracement comes in there at 27.45. That's down about 75 points. So I would be watching that as potential. But folks, we're heading to 25.65. We might even do it today. You know, then if we do it today, then we're going to have something like 1987. And gosh knows we're into the bond. Folks, when the bonds go to negative interest, this is not good, folks. I just hate to tell you this. I don't want to be the bringer of bad news. But that's it. You know, that's it. That's for sure. All right, let's take a quick look here for Mr. Marshall Robinson to let him take a look at this Australian dollar, because it did have one heck of a rally here. If you'll give me a second, Marshall, I'll get this up here so we can take a quick look at it, and will be fun to watch. Okay, let's take a look here. Where is it? There it is right here. Hold on a second. Get this up here. Sorry for, well, oh my God, it's even done more than I thought. Oh boy. Now I want you to know, folks, that I bought the exact low of this Australian dollar last night. I had my order setting in there, and if you believe that, I still have 2 shares of the Brooklyn Bridge. Look at this. You see this move here? We went from 63 to 66. Folks, that's a $9,000 move in the Australian dollar today. Are you kidding me? They're getting a little scary. I think what we're seeing here, let me give you my 2 cents worth what has happened. And we talked about this several times, but not in this context. Let's just look at something that is important. Okay, here is the relationship, okay, between the price of gold and the US dollar. You'll notice how it follows along pretty nicely until March the 2nd or February the 25th, somewhere in that ballpark. You see the divergence that took place there? That's where that big ABCD and the euro was when it was, down there at the, making that ABCD pattern. That's what caused that. And we had gold get up and make a high of 1702, I believe, last night, and then it broke $40 an ounce. And then silver, it made a higher high by 2 cents and then collapsed. I mean, this was, you had to be watching it, but that knows what's going on. But this is a big thing in this gold. And the reason why goes all the way back a long time ago to the time of the pharaohs back in 1974-75. You see there? That's when they brought out petrodollars, when Arm & Hammer made a deal with the dudes there at Saudi Arabia that we're going to buy all your oil. All you got to do is price it in dollars, and that's what happened. Okay. Now, I want you to see the little low that I've got marked there, 1982. That was August the 9th, 1982. That's when we hit in the bond market. That's when we made the bottom of the bond market. And then the bonds have gone up ever since that time, still making new highs as we speak, much to the chagrin of the crematorium firm of Dewey, Cheatham, and Howe. But let's remember, this is an event that is going to be, I don't know when it's going to happen. All I know is it's going to be a monumental event. So let's just keep our powder dry. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, continuing on with that chart about the oil for dollars, that's very important because if they take us off the standard, this means the U.S. dollar is going to weaken dramatically, which it is doing, as you can see by the price of the bonds. As the price of the bonds go up, they have to buy, the bonds. The foreigners have to buy the bonds. Now they have to buy them with cheaper dollar. We're paying them back with cheaper dollars, folks. This volatility in the bonds is not a good thing. Well, neither here nor there. Let's take a look here at where the real problem is going to happen with some of these markets, and that is in the junk bond market. And I don't know where this thing is going to open today, but it isn't going to be up. That's my guess. And anything can happen, I suppose. But this is where these oil companies that have, borrowed money, that's it. That's where the real problem is going to possibly lie, what we're looking at it. But the real problem is, folks, this is a black swan event. You have no way of figuring out what's going to happen, but it's very serious. There's no question about it. The two good things, that if there is such a good thing, is A, the people are aware of it. If they're starting to shut things down, and as soon as warmer weather comes, it will probably burn itself out. It might not be till the fall. But when this thing is over, oh my goodness, there's going to be buys that you just won't believe. Those of you that sold the soybeans and soybean meal last week and have made really good money in that, I would certainly take some off the table this morning, down about $1,000. The crude oil totally, collapsed. Unfortunately, I said take some profits on Friday, and if you took some of those, that's okay. If you still got some of them, the long-term price objective on that crude oil was at roughly $30 a barrel. We hit 27 and change, and now we're bouncing around in here. That could be the sleeper today. Would be the two sleepers, I think, would be watch the Japanese yen, folks, because that's a risk off, risk on. If you see some patterns in that, that'll give you a pretty good idea of what's going to happen. I'm not sure when they're going to open the S&P this morning. Is it going to be at the opening of the New York Stock Exchange? Can someone tell me that? So we have seen limit down so rarely, and they change the rules all the time. I'm not sure what the rules are. I know what the percentages are, but as far as when it opens, I'm not sure. But the numbers that I gave you were pretty much the case. And remember that these algo traders are out there, and so they're going to be watching extremes, like how many standard deviations we are down from the mean, and that's where that number of 2444 comes in on the Dow Jones. That would be down 1,900. That would be 1.618 of the largest correction we had since it was down 1,100 a week or so ago. Of course, we went 1,300 and 1,200, but we have not reached the 1,900 level, which we should reach today. So that'll get enough news going. And of course, they're going to blame it on somebody, and you'll never guess. Okay, any other questions? 877-927-6648. Okay, regarding the gold, if you remember, we had Bill Meridian on last Friday. He said that he was looking for a top in the bond market and the top in the gold market, and I'm sure the bond market is going to give him his chance here, with it being up another, folks, being up another $13,000. We have now matched the move in 1982 in the bond market. We haven't even come close to it in the stock market, but in the bond market, we have reached that. That's how quickly it moved. And the reason why I know that, because in 1987, I was short stocks and long bonds. And the bonds, with stocks down 300 and some points in the Dow, the bonds were down about a half a point, and half to 3/4 of a point, and I was really concerned whether I'd get the money out of the firm or not. And so I said, well, I better cover everything. And so I covered the bonds, and the bonds rallied 13 handles without it. I mean, they rallied 13 handles with basically out a downtick. I mean, that's how quickly they rallied. And it was coming off of a bottom from 1982. So that's it. No, there's a lot of things that are happening with this. Remember, folks, these credit card companies, these people that are working for people that can't go to work, that don't get their things, they're not going to pay their credit cards. And that means these earnings from these things are going to be put back. So the earnings forecast that people are looking at, that they don't count anymore. This is something that is different. So we're in the midst of it. You know, I don't know when the bottom is due. We're going to have some huge swings. We've already seen that. Gee, you're really telepathic on that one. But we will have some big swings. But watch the numbers. And folks, if you've never traded the stock indices, stay the heck out of there, because these things, they're going to have, we haven't seen any, well, we did see some pretty wild, but it traded nicely after the open last night. When it opened at 28.90, it traded all the way down. I mean, you could have had sell orders in there. And but be careful. Go trade the euro, trade the yen, and all that stuff. The gold right now this morning, Dennis, the way I look at it, there's resistance in the gold at 1692, and I believe the support, we made it last night at 1660, and so I would watch that very, very closely. There's an ABCD there at that level, and I'm looking to short that gold at 91, I believe, with about a $5 stop, and we'll see how that works out. But keep a close eye on that oil, because it could surprise some people. It has before, and it probably will again. I remember the biggest down day we've ever had in oil was in the Desert Storm. I've told this story too many times. I'm not going to repeat it, but oil went from 42 the night before the new moon and the start of the Desert Storm War into January of the next year. It went from $42 a barrel to $11 a barrel in January of 92, and that was a monster buying opportunity. From there, it went all the way up to 144, and when it hit 144, Goldman Sachs issued their special report. Crude oil, $200 a barrel, and you'll never guess who was selling crude oil up at there at $144 a barrel. And they got fined for that, I think, $10 million. And I think they made more than that on the downside. God, you got to love white-collar crime. Unbelievable. Yes, Goldman Sachs had a chance to hold. It was sitting right at the 61% retracement. But when Italy shut down, look at here, folks. Look at the Guardian last night, from yesterday here in the across Europe. Okay, look at this. There are 10 articles there. Okay, there are 10 articles. Eight of them are about the virus. So there's where the thing is. That's where the action is. It's not this thing in Saudi Arabia. That's those guys have been fighting for 3,000 years, and they'll be fighting for 3,000 more years. So stay away from the stock indices unless you know what the heck you're doing. If you know what you're doing, it's okay. But remember, we haven't seen limit down for a long time. Will we come off at limit right at the half hour? Does anybody know? Mr. Z, you're probably on top of this, I would imagine. So we'll see what's happening. We'll know. I can't tell you right off, but we're going to have Norm Winsky on here at the break, and Norm will probably give us some good information.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, evidently, Mr. Winsky must have slept in because, by golly, we haven't been able to reach him as of yet. So, maybe we've got Norm. Are you on the line now?
Yep, I just got here. I overslept my alarm. I apologize.
Well, you're going to be penalized very, very heavily. But go ahead, take the mic, and tell us what to do next, Norm.
All right, can you see my notes okay? I hope so.
Everything's perfect. Go right ahead.
Great. Okay, so I was last on your show on the 9th of March, and so I'm going to go over what I said then and show you the charts and show you what happened, okay? You folks might want to take a screenshot of these events that I talked about last time. Okay, we had, let's see, Jupiter lined up with Saturn on the morning of the 20th. Did that both Helio and Jupiter to Neptune and so forth. There's these events here. I'm going to go over the different things, okay? So here's Coco. Coco we had for the over the weekend of the 28th. Jupiter lined up with Pluto there, and Pluto's a Coco market. Wait, did I say that right? Coco's a Pluto market, right? Anyway, that didn't work. There's a red arrow. Red arrow is a miss. Green is good. Here's coffee. Coffee had triple signal on the 20th. That was a nice pullback low there for the coffee. It went up, but did have a miss there on the 24th. And then we had a breakout on the weekend of the 28th. And over the tops there. So then if you were a breakout trader, which I'm not, and I don't think Larry is, then you might have bought it there, you know. Otherwise, you might have taken a loss. Here's corn. Corn, we had a new moon. Yeah, we had a new moon back there on the weekend of the 21st. Corn didn't seem to care, and that was a miss. On the other hand, the gold worked really well. It topped out. That had a nice top that weekend. In fact, it topped at the new moon was on Saturday, and the gold topped on early Monday morning, 4 o'clock in the morning on the Sunday trading session. You know, here's your hogs. They worked out really nicely. They made a low there. We had the 28th weekend for a low, and they bottomed on the 28th, and there you go. Crude oil, it looks even more spectacular now with the big down we just had overnight. In the crude oil, we topped right there. We got the top bar there on the, I think the 20th of the month. Here's silver. Silver topped with the new moon along with gold there over the 21st weekend. And there's your beans. Beans made a little spike high there right on the 21st with the new moon. And then broke down the next day, and there you go. Here's S&P. We had lots of the stock market. It's the big basket of everything, and so we have a lot of signals for the stock market. There's the S&P there. We had the triple signal there for the 20th. That made a top there, and we broke down as we went down to for the new moon, and to the 24th. We made a little low there. We had a bounce high there the next day, and then we had the 28th, like the other planetary the markets, and we made a low there, and then we bounced, and now we're headed lower. Now overnight, I saw what was happening. We were a lock limit down last night on the S&P, and so I got my calculator out and did some Fibonacci projections where we might go. I don't know how. Larry, do you know? I didn't get a chance to look. How low have we gone this morning now? What's the low? What's the mid and the low on the futures?
We're limit down right now at 27.59.5.
All right. Well, I did some Fibonacci projections. 2 big moves we've had. One got you. I think it was 618 back from the December 2018 low to the February 2020 high. That was 618 back would be 27.45. 236 back from the whole bull market from March of 2009, which puts you at 27.50. So you got 2 numbers there, Fibonacci projections there, within 5 handles of each other. So that's kind of interesting, you know. All right, so there we had bonds. We had 2 signals for the weekend of the 21st. Bonds didn't seem to care, and they just kept going. By the way, that's an indication that when a market just plows through these windows, these change of trend windows, that's a very strong market. That's acceleration, and that's what we've now seen in the bonds. If you're looking at long-term bond market here, if you want to make decisions based on what the bonds are doing in the big picture, you really need to, because the futures contracts over the many years, they keep changing because the rates have kept going down. They keep changing the terms of the T-bond contract. And so they lower we started out back in the late 70s, Larry. I think we had an 8% coupon for the futures, And then over time, I think they went to 6%. There was a change a couple of years ago. So, you can't look at what was it, July of 2016 when we topped at 177. You can't compare that because like in 2018, something like that, they changed the terms. And so we were making new lows on the rate. Here, see this back here? That got taken out last year, before you ever saw 177 on the futures contract. So here we go. Now we're at astounding. This is as of Friday, and based on what the futures did to Sunday, this is going to go a lot lower. We're at 121 on the yield on a Treasury bond, 30-year Treasury bond. That's crazy. Great time to be. If you have any inclination to refinance your mortgage, I'd be doing that right away, man. This looks fantastic for that. Here's your dollar. We topped out there right on the moon. We had two signals there for the dollar there right on the 21st weekend. And here's your wheat. Same thing there with the wheat topping out there on the new moon. Here's the euro. The euro and the yen were spectacular, making a low right there on the new moon on the weekend of the 21st. There we go. Here's some sample of my day trading. I picked something that was really simple from Thursday. The moon was 180 degrees to Jupiter at 11:57 Eastern time. Let's go look at what happened there. There's 11:57. The market had come down a few minutes before, making a little bit of a base there. Went long there. Market rallied over the next 3-4 minutes. And then you were up about 7 or 8 handles, and so you picked up, about $350 in about 3 or 4 minutes. All right, what's the other 1, 2, 3, 4, 5, maybe 5 minutes, All right, I have a free day trading class if you're interested in that. Here's what's coming up in the future, Larry. We have here. I'll see if I can make this a little bigger. Okay, so the reason I keep bringing up the moon is this is a special day, Larry. We got a full moon at perigee. That only occurs every 14 months. The pop culture, they call that a super moon. The scientists call that a lunar syzygy when you have one or more.
Okay, we have to pay a few bills, and we'll be right back with Norm Winsky of Astro Trend.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Norm Winsky of AstroTrend. Norm, we have a question from one of our listeners, and he is asking, is today going to be a bottom day, or is this the beginning of more of a acceleration to the downside?
Well, we don't know for sure. Nobody knows.
Whoa. You mean you don't know for sure?
Yes, sir. But the probabilities favor that he's getting a little bit ahead of the curve here. So we're gonna put his question on hold for a minute. I'll be back to that in a minute, okay? I promise. Sure. I while during the commercial though, I went and looked up the 30-year the TYX is the 30-year rate index, okay? I was just curious what has happened now with now it had time to catch up with the bond treaty, you know. We're down to 0.86, Larry, on this thing. Unbelievable, right? 30-year bonds yielding 0.86, not even a one, not even one, you know? It's crazy. Mm-hmm. All right, now let's go back to the future. Back to the future sounds like a movie. All right, let me get back to that page now. All right, I was saying today's a special day. We got a full moon at perigee. That only occurs every 14 months. But as they say on late night commercial TV, Larry, wait, that's not all. Tonight we have Mercury turning direct. You know, that's one of my top things when the planets turn retrograde or direct due to the relative motion of the Earth to the other planets. That's like a big energy point, you know, right? So this is very rare. It's reminiscent of its cousin back when I was on your show in May 1819 of 2015, when we had a new moon and Mercury was turning retrograde. This is kind of like the opposite. That was the high of the year for 2015. So I'm not saying that this is going to be the low of the year, but I think this is a very important window, and we may make a low by late today or early tomorrow. If we don't and we take out this low, then we're looking at really like an 87 type scenario possibly, but you got to be alert though. This could be a significant, at least at minimum, a short-term trading low, right? Mm-hmm. So there we go. So we got Mercury turning, we got your full moon, and we round up the usual suspects. Your financials, as you saw earlier, we had some great turns on the new moon 2 weeks ago. You got your financials, your grains, your precious metals, stocks, and because the moon is in Virgo, watch your beans. If you get a big washout in the grains today, that could be a great buying opportunity in your grains, especially beans, And you got Mercury turning direct in Aquarius. That specifically relates to your grains and your copper And there you go. And beans. Pluto's going to be 180 degrees in the U.S. natal chart. That's we take a snapshot of where the planets were when our country was founded on the 4th of July, 1776. And Pluto is going to be opposite our Mercury, our communications, our trading, all that sort of thing. We're going to get probably some bad news today if that's not enough. If the other stuff wasn't enough, let's pile on, And you want to watch the U.S. stocks, T-bonds, and the U.S. dollar. And then in a couple of days, we have Jupiter is going to be lining up with the U.S. Uranus. That's probably negative for our U.S. Technology area there for U.S. stocks, T-bonds, and dollars. So we got a huge window here right now in the next 24 hours for something big. Obviously, we're Larry, maybe you already said this earlier in the show. When was the last time the S&P was lock limit down like this? It's been many years, right?
I can't remember because they've changed the rules so darn much. I can't remember.
I'm thinking we may have to go back to like 2008 or something before we saw last time we saw anything like this. I don't know. So anyway, there we go. So this is obviously a huge day. I asked Larry a week ago to come on this morning because I thought this was going to be a big day, and there we go. So the market has not disappointed in terms of putting on a big performance here. All right, well, here's how you now. Anybody else have any questions before I go to the how you get a hold of me stuff?
Go right with your commercial, Norm. We're okay.
All righty.
Most everyone's in a state of shock, so go right ahead.
Well, I am. I looked at crude oil last night. It was down to $28, 28 change. I'm sure you noticed that, right?
27.70 was a low, or 27.40 was a low.
All right. Well, I probably went to sleep before that happened. So anyway, we're looking at maybe $1.70, $1.80 on your gasoline if this were to continue for a couple weeks. Anyway, so here's how you get a hold of me. I've been doing this a long time. I started studying the markets when I was a teen, and then I went when I went off to college. I started I ran across a little book called Donald Bradley's Stock Market Prediction, and there when I went to college in Larry's hometown of Terre Haute at Indiana State, and I found the miracle in that I found that book in an unlikely place of Terre Haute, Indiana, and that changed my life. I started investing, and I did well during college days. That led to my buying a membership on the Chicago Options Exchange when it was new in 1975, and I did 12 years there as a Chicago floor trader on the CBOE and the Chicago Board of Trade. And so I got a little bit of experience. So I have a free day trading class if you like that. I got a more advanced class for the swing trading. And so I can teach you astrology if you like. And so get a hold of me right away. I'm taking names now for my April classes. That's Norm here, and I'm in sunny Florida at 239-594-3939. That's 239-594-3939. There's my email. It's kind of long. NWINSKI at Embark Mail. That's with a Q. It's like root beer in the middle there. Bark, BARQ, mail.com. Or you can call me on Skype at nwinsky_digit1. So looking forward to helping some of your folks there, Larry. Anybody have any questions, comments, whatever? Fasten your seatbelts. To quote the famous line, Betty Davis line from one of Betty Davis's more famous lines, all about Eve. Fasten your seatbelts. It's going to be a bumpy ride. Right, there you go.
Listen, thanks for joining us, Norm, and we'll have you on again, and appreciate all the information, especially about the super full moon and the Mercury and things. So we're going to be very, very interesting to watch this. We just opened from limit down. We just traded at 27.37, and so we'll see how that hangs up in here.
Well,
and we'll see where the market...
that blows through those Fibonacci numbers, right? You got to get the old calculator out and see what the next level is. I think there is a number.
Well, there's a Fibonacci number, right? There's a Fibonacci number there at 27.36, but with the volatility today, you have to look at it very closely, and for heaven's sakes, use a stop. But hey, thanks for joining us, my friend, and we appreciate your information.
All right, everybody, be safe. Call me right away, and we'll get you to the show you some great stuff here, right?
Okay, you bet. Thank you, Norm, for being on. Folks, we're now down 2,000 points, it looks like, down in the Dow, a little bit more than that possibly, and we're down quite a bit here, and the S&P keeps dropping. So watch, the gold is backed off about $12 so far. The interesting one is the euro, because I follow it quite a bit, and there's a possibility here we might get a reversal day in the euro, but these are short-term, folks, because what we've done here is we've broken some major support here, and fear has come into the markets. You can see that now, and it's in the news everywhere. The news is just, they're accentuating everything, as they should be, because this is something we have to take care of, but it'll be taken care of, and it'll be okay some days. It just might not be today. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, the opening call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted a series of charts that show where we are. Astrological, you notice that the transit charts there show that many of the planets are lined up in the 2 houses. That's exactly what happened in March of 2009, March the 5th. And the other charts I've shown, the effect of what these viruses do long-term in the market. But remember, we've been in an unabated bull market since March of 2009, and now we're probably going to be looking at something else. But the key one was the last one, which shows the 30-year Treasury bond. What's happened on these key dates of October 1982. Stock market bottomed on August, but the bonds bottomed in October. Then you see the 87 crash. You see how much higher we are than the 87 crash? That's not even including today, folks. And then you see that March of 2009 was also a big day. So this is a big day. The question is, how do you enter and what are you doing? So let's make a close-up limit at what's going on at it. But we live in interesting times. This is a very serious time. Make sure you wash your hands. Don't touch your face. All of these things will be very, very important. And they're just getting started, folks. That's the problem. And that's it. I don't know how the stock market's going to handle it, but if it gets a little lower, they might even close for a few days, folks. If you remember in 2001, we closed for 7 days. We might do that again. It might close for 2 weeks. But no matter what, we're going to come back and it's going to be great and the trading is going to be fabulous. So just hang in there. I just posted the shorter term pattern in the crude oil. I mean, it's moving $2,000 at a time. Shut the front door and raise the rent. Anyway, just remember to keep a level head here. Don't panic. And for heaven's sake, if you don't know what you're doing, just don't, worry how that's going to happen. We'll see. So that's the key that we're paying attention to here. Whether it means much or not, I don't know. But make sure you protect yourself. That's for sure. Yep, living in Margaritaville is where you want to be today, Peak. Thanks you for joining us, folks. We'll be talking to you on the flip side tomorrow. Live every day in an attitude of gratitude, and may God bless.